Welcome to Mortgage Minute. My name is Athena Paquette, and I am your mortgage partner and your mortgage coach. I get this question a lot, and this week it came up again, where one of my realtor partners was writing up a repair request and wanted to know how much the seller could give in credits. So I thought this would be a good time to have a reminder of exactly what the seller can pay and what they can pay for and what those limits are. So here's your Mortgage Minute. So what are seller credits? So it generally is when you have a repair that comes up, and instead of the seller making that repair, you get a credit. In mortgage lending, we cannot have repair credits, so they have to be closing cost credits. So that's rule number one. Never show me the repair list, never send me those addendums. Only send me or your lender the request for a seller credit, and not a repair credit, but a closing cost credit. So how much can you get? Depends on the loan you're getting. So if you're getting a conventional loan and you have less than 10% down, then you can have up to 3% of the sales price in credits. That can cover recurring and non-recurring closing costs. Like I said, it cannot go for repairs. So the only problem with that is sometimes the closing costs are not quite enough for that credit, and then we have to adjust. That adjustment will be in another video, how to handle that. But if you have less than 10% down on conventional loans, 3% of the purchase price in credits is the total you can get. If you have more than 10% down, they can receive up to 6% of the price in credits. So please note, though, on rental properties, so rental property buyers, no matter how much down payment, you can only get up to 2% total closing cost credits. If you're doing an FHA loan, it does not matter how much down payment you're doing. All FHA loans can have up to 6% of the sales price in seller credits. So whether you're doing 3.5% down or 0 down on a DPA, doesn't matter. 20% down. I do have some FHA buyers that, because of circumstances, they have a large down payment but needed FHA. VA, same thing. VA will only require, will allow up to 6% in closing cost credit. And just like all other loans, this can cover escrow, title, appraisal, taxes and insurance, and your first payment. Those are all prepaids. Escrow, title, appraisal are third-party fees. So all of that can be covered under up to 6% of sales price in closing cost credit. And some of that money, if you don't have enough closing costs, could be used to buy down the rate up to 3% lower than the market rate. So that's it for your Mortgage Minute for this week. I hope that helped. And if you have any questions, be sure to reach out to me on my cell. Just text me, got a question, and I'll get right back to you. Have a great week.